Bitcoin and Ethereum fall to new lows. The great crypto downfall is not going to slow down anytime soon. Many experts are predicting a crypto winter, and it's giving chills to the bones of the investors. Already the crypto is down, and the top two currencies of the crypto market are dealing blows of heavy losses. The difference between the crypto collapse now and the one that came earlier is that there are more retail traders and giant interconnected firms. So once the problem starts, the contagion spreads fast. The same innovations that have made trading easier have also made it easier for problems to spread. So what is the reason for it? And will the crypto rise again, or will it go down lower than that? Hello everyone, and welcome back to Crypto Trends. Today we are talking about, can cryptocurrency have the potential to survive the bearish fall, or is it going to crash with the dreams of many investors? Are you ready to know? Well, without delaying any further, let's get it started. And please hit that bell icon so you don't miss out on any new updates from our channel. Over the last few years, several multi-billion-dollar crypto firms rose up in the space, along with a slew of new, exciting, and profitable ways to speculate. Money was cheap thanks to QE, and all of these billion-dollar firms were intertwined heavily, all of them exposed to each other, and all of them in debt to each other. All of them engaging in massively leveraged trades and nonsensical business models and crazy speculation. And the retail traders were just as greedy and just as enmeshed. It was a powder keg. The collapse of Terra Luna and the fall of Bitcoin prices generally seem to have lit the fuse. And now, we have blood in the streets. The fall of Terra Luna erased billions of dollars from the balance sheets of these firms, sending them reeling. The collapse of Bitcoin and Ethereum prices seems to have been the final blow. Worse, the failure of these firms endangers other firms who react by freezing withdrawals and interest payments, which destroys their reputations and sends retail investors running. Or rather than freezing withdrawals, they're just going bust. Many experts are predicting a cryptocurrency winter. The latest crypto news winters are prolonged periods of falling prices. The last one occurred between early 2018 and mid-2020. Some experts believe that Bitcoin could fall to $20,000, while others say it could fall even lower. Bitcoin's recent 30% decline is one of the numerous reasons many investors are wondering where the underside is also for these digital assets. Bitcoin and Ethereum prices are steadily declined since the tip of October. Many are wondering how low these prices will go before they stabilize. Some say it may be as low as $2,000 for Bitcoin and $500 for Ethereum. If that happens, it might mean a 94% decline from their all-time highs. As a result, a variety of cryptocurrency exchanges and trading platforms have had to suspend operations, fire employees, and put a freeze on new hires. After EU lawmakers earlier this month agreed on anti-money laundering guidelines for cryptocurrencies, the value of Bitcoin and Ethereum further fell. According to the most recent Bloomberg MLIV poll study, the value of Bitcoin is on its way back to $10,000. Kevin O'Leary of Shark Tank has also claimed that the worth of Bitcoin has not yet reached its low point. Experts predict that the worth of Bitcoin will drop to $10,000 before rising to $30,000 again. The Singaporean government also intends to enact tougher controls, like limitations on retail trading, to guard consumers from the crypto crisis. In order to prevent concealing, terrorism financing, and other crimes, the European Union parliamentarians passed new legislation last month that creates it possible to trace transactions of digital assets like Bitcoin within the same way that traditional money can be transferred. As per statistics, breaches and exploits cost blockchain projects associated with Web 3.0 about $2 billion within the half of this year. In step with another research, the world cryptocurrency industry lost a minimum of $670 million just within the quarter two of April through June, with scams and hacks accounting for 97% of these losses. Prices for Bitcoin and Ethereum vary widely. As example, Bitcoin's fluctuated over the past few days between $18,905 and $20,000 and dropped as low as $18,436 on March 20th. Ethereum is additionally down, going from $1,076 to $986 in but 2 hours. Both coins are trading below the $20,000 mark, although the recent price dip was framed pretty much as good news for stablecoins. The biggest danger to the cryptocurrency market is the possibility that the value will crash completely, essentially killing the complete crypto market. However, that doesn't mean that you shouldn't just be worried that several factors can make cryptocurrencies lose value. If one among those factors occurs, investors will likely be quick to live their cryptos and offload them to avoid further losses. Risk assets experience significant market volatility. Bitcoin, Ethereum, and other cryptocurrencies aren't any exception. The worth of those risk assets will be plagued by inflation, stock exchange volatility, or Fed monetary policy. Therewith in mind, it is crucial to grasp what's driving these risks. This video will highlight a number of these risks and explain how you'll protect your assets from them. A serious risk to crypto assets is heightened inflation. The risk of an enormous fall in Bitcoin and Ethereum is incredibly high. An outsized percentage of the market's output and call contracts are positioned for price drops of about $2,000 to $2,500. If an exchange delists Bitcoin, it'll immediately delist all its Bitcoins. That might mean a large loss for ample people. But if the worth drops dramatically, investors would be unable to sell their cryptos back to exchanges, which might result in massive losses. Regulators often target three key areas when regulating the cryptocurrency market. The foremost obvious impact of regulatory changes on the value of Bitcoin and Ethereum is on the regulatory framework. News about general bans or the treatment of cryptocurrencies as securities have the best adverse effect on their valuations. However, news about restrictions on the interoperability of cryptocurrencies with regulated markets tends to coincide with market gains. Regulation is important to stay the worth of cryptocurrencies in check and bolster investor confidence. Regulators might not be as clear as they once were. The SEC recently confirmed Gary Gensler as its chairman. While this might hurt cryptocurrency prices, it could also stifle innovation in an exceedingly nascent industry. Furthermore, it could also prompt industry participants to maneuver their operations to countries with less strict regulations. Regulators can help prevent this by purging bad actors in industries and inspiring trust and growth. The government specialization in protecting investors has led to new regulations. For example, the Big Apple Attorney General investigated Tether's crypto trading platform, and the state took punitive measures. While the state of New York has many advantages, it should also implement its regulations to push the event of the cryptocurrency industry. While regulations have benefits, cryptocurrency firms should target their ethical practices. If they fail to try and do so, they risk losing their customers and their funds. Bitcoin and Ethereum prices are highly volatile and will potentially go lower. Except for the most benefits, you'll be able to interchange cryptocurrencies through Bitcoin trading software. However, given this uncertainty and political turmoil, it's difficult to predict where prices will go next. If you're inquisitive about investing in either currency, it's important to try and do your research first. Right now, inflation is high and growth is relatively low. Let's see if this inflation can be controlled back to around 3% from the current 7 to 8%, as reported by the CPI, or the up to 13.5% reported by some independent analysts. The economy can increase its growth rate to 3% or above. We could see a new stock and then a crypto rally. This is the issue of the labor market, and companies are finding it hard to get talent because of their desire to avoid raising wages and increasing perks, as well as many companies' resistance to the new era of remote work. If the labor market loosens, we could also see more economic growth. However, this could take anywhere between a few months and a few years, and many say that we may suffer some type of recession in between. It's really impossible to tell at this point how much time it'll take to recover. The crypto crash taught many lessons in a week. Even the highest altcoins like Terra can suffer overnight losses and struggle to survive. The thought behind decentralized algorithm stablecoins like Terra USD looks fascinating, but it needs a much better strategy. And that's it for today, guys. We sincerely hope you enjoyed our video. Please click the like button and make sure you share it with your friends and family. Don't forget to subscribe to our YouTube channel as well, where you'll see even more of our incredible videos. Hey, thanks for watching today. We'll catch up with you in the next video. Happy investing!